afternoon, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 30th of April, 2019. We're just after 4 p.m. Central Daylight Time. Well, while you were down like this, the reality is these markets were a lot higher than this. You were not down 8 points at the last trades in the Russell. You were much higher than this in the NASDAQ as Apple's earnings came out, and the stock there jumped about 5–6% at one point and stayed up near that zone, kicking these other indices higher. Excuse me. Tomorrow we have the FOMC. We saw today some stability out of Europe, which kicked up the euro currency, put some more pressure on the dollar. We've had a little bit of a rally going on, and I'm not saying much in the metal market. We know that we've got still the meeting going on right now between our trade representatives and the Chinese in China. So we've got Steve Mnuchin, Robert Lighthizer leading up our team there, and then everybody moves back to the States in a few days, and they try to wrap things up as best as they can. The one thing that continues to bother me, at least on the trade deal, is this. Both sides have a dispute. How do you resolve it? I mean, yes, level heads talk it out, but in most places you have an arbitrator. You've got a third party of some type. The way this deal is going, it doesn't sound like that's it. I don't know if the tariffs are coming off all at one time, how they'll negotiate those parts of it. So there are still a lot of unknowns in that. When we take a look at the weekly area chart of the S&P, I mean, come on, this is an all-time high close, so you can't fight what the market's doing. It keeps going on to the upside. You can see it finished higher with an outside day up today. Now, the one thing outside days do to me is they're a warning sign. You don't want to see the low of an outside day taken out the very next day or the day after that. That often is a trap for the bulls. Doesn't mean it has to go down far, but I define that as a trap. So that's the number at least I don't want to see taken out. When I take a look at my swing line study, I've got a pattern of higher lows, certainly higher highs, and I've had that for a while. Market's in an uptrend. The market has not even been able to get back to the 18-day average of closes since the very end of March. So this market has stayed in an upside bias. I define bias, by the way, as if the market is over the 18-day average, I say it as upside, under it, downside. It's a filter that I use on swing lines and some of the other indicators. So I'm defining this market is in an uptrend via the swing line. The bias is still up. Resistance is right here. It's the upper Bollinger Band. Admittedly, Bollinger's bands move in patterns, and this one has been moving higher, but you hit it the past 2 days and you've been into a resistance area. This is, to me, the strongest part of what the indicators are on this chart. It's the slow stochastic, which is the momentum oscillator, and it has been going sideways over 80 for quite a while. As that's occurred, the market has ground out higher highs, and on each of the breaks, the market has found buying support. That is the idea behind this oscillator. Now, if the red line closes under 80, it'll be a signal that that upside momentum has been lost for the moment, and to see prices in the 18-day average at that time return to each other would not be a surprise. In the NASDAQ, as I said, this market much higher than down 13 points on the very close. But here's the importance. This is the close, and with it you lost the embedded reading. You either get up and over yesterday's high immediately and re-embed the stochastic, or momentum as it leads price is saying that price and the 18-day average want to come together. It's a definite shot across the bow, a warning shot, and traders tonight will have to decide what they want to do with that. In the Dow, as you can see, the market is just overbought. It's been hugging the 18-day average. It's caught in a very narrow trading band right here. It has certainly rescued itself to a degree because each break down to the 18-day average has found support. Via the outside day up, if that low of today is taken out, I would, for one, be saying that's a bull trap and then looking for the market to potentially make a break under that 18-day average. And the question is, could it get to the lower Bollinger Band? Until that's taken out, and I'm talking today's low, the bulls have full control of the market. Swing line up, bias up, trend up. In the Russell, the market's been having trouble, just like the other indices, at the upper Bollinger Band, similar to what we've got in the Dow. This is just an overbought market. It does not have the embedded reading that you have in the S&P. We're in a resistance area in an uptrend with upside bias. In the VIX, I would not be surprised that the pros sold the VIX today right here against the upper Bollinger Band. And one of the things I've been telling you, I'm noticing that each time you're hitting that VIX, it seems to me that the pros are selling either puts when you get down to the bottom or calls against that upper Bollinger Band number and trying to come out at the 18-day average of closes. I know you're going to say it's risk. I'm not saying it isn't, but I'm saying it's something that I am noticing, and it seems to be at this point in play. In the T-bond market, we have an outside day up going into an FOMC announcement and policy meeting. Tomorrow at 1 o'clock, we get the announcement. 1:30, we have the press conference. The market is not expecting the Fed to come off its pivot in any manner. They expect them to stay. Even with President Trump tweeting they should drop their interest rates a percentage point, everyone that I know of is expecting a flat report out of them. In other words, just holding par. The market's got higher lows, higher highs. Again, I'd look at today's low very importantly. While the market's in an uptrend and you had the outside, I think did we have an outside day today? I don't know. 147.21. No, you didn't. I'm wrong in putting the number here. You've got a market that's still against that 18-day average, looking to see if the market can pump through that high. Not an outside day. In the T notes, this is where I got the outside day from. Higher lows, higher highs. If you look at today's high, 123.23. Yesterday's was 123.22.5. So you took out the low and the high. You don't want to see today's low taken out if you believe, as I do, and you don't have to, that if you take out the low of an outside day up, it spells trouble for those longs. And because you'd be under the 18-day average, maybe it would set into play attacking the Bollinger Band. At the very least, it would break the pattern in the chart that's been higher highs, higher lows. TLT is the same. You've got the higher lows, the higher highs. You closed over the 18-day average, but not an outside day. So just taking out 122.83, yesterday's low was 122.85. That's the number. That would break this pattern. Until it's broken, it ain't broken. So the trend is up, the bias is up. You've still got in play the potential to get to 124.54. What would ruin the party and could set the market bearish is taking out that 122.84 area, especially if you don't get over this 124.02. You could have lower highs, lower lows, then putting in the play down here. So it's good to know both sides of what could happen in there. In the dollar index, we're in the third day of a correction. We had a nice run to the upside. You've come back. I find it interesting that the first time the Bollinger Band got up and closed right here, we're back to that level. And yes, you had 3 more days of a solid move to the upside, but it's given that up. Momentum is turned down as well. The trend is up. The 18-day average, what I call that line in the sand, might be the number that comes into play tomorrow. Still, you've got divergence. You have momentum pointing down, the bias up because you're over the 18-day average, and the swing line up. In the eurocurrency, you have divergence as well. You have momentum climbing now, but the prices are under the 18-day average, so the bias is down and the trend is down. You have to take out 113.16 to break this downtrend pattern. Resistance still 112.90.5. In the British pound, you got up high enough to take out a previous break high. In other words, you had lower highs, lower lows, you took that out. So you're out of a trend. The market stopped about where, if we look at yesterday, we had mentioned if you had a rally, maybe the 100-day and the 18 might offer some resistance, and it certainly did. You closed over both, but it wouldn't surprise me that you just play around in there. You've had this nice break. I want to say it's over at this point, but I'm not saying the market's turned bullish. In the Japanese yen, the market is still in an uptrend with higher lows, higher highs over the 18-day average, and momentum up. If the market can rally further, the Bollinger Band might be where the resistance shows in that 90.49 zone. Bitcoin stuck now. It fell pretty hard. It's stuck now against the 18-day average of closes. You've had the lower highs, lower lows, momentum down. So far, the market's not able to get to a lower band or a higher band recently, and it's starting to hug this 18-day average as the number it wants to trade against. As we take a look at Brent, and this is June, and I'm going to have to get rid of that. Today's the last trading day in the June Brent. This is where that spread ended up, about 889. You want to move to the July Brent now. And when you look at July Brent, which I have here, you've got the pattern of higher highs. And when you broke through, right through here, this low, that ended the pattern of higher lows, higher highs, and potentially you could get back to that 18-day average, that line in the sand. You did that, and if you take a look, that's pretty much what this market's been trading against the past 3 days. A move under 70.59 could set up lower highs, lower lows under the 18-day average. Maybe the lower Bollinger Band comes into play, but you still have that 18-day average to deal with. And you got a flip-flop of it in the WTI. You had broken down, now you've rallied back up to it as a resistance point and closed just under it. Are you trending in this market? No, you've gone sideways. Again, when you broke right through this low, market had one swoop, took out the trend. You no longer had the higher lows, higher highs, and it's gone neutral since then. Rebob gasoline has divergence. What you've got, momentum that lost its embedded reading, which often leads to price and the 18-day average coming together. They just missed from what I can see. They keep reaching at each other, didn't quite get there, and now the market's about 5 cents higher than it. Lower highs, lower lows, momentum faltering, but the buy is staying up, and still the 18-day average acts as a support zone. In nat gas, you're backing off from those highs. The market lost its embedded reading. Often, as I say, when you lose that embedded reading, prices make a run at the 18-day average. It doesn't have to hit it, but I don't think you'd disagree with me that since you were embedded here and then you lost it, you've certainly made your run at that 18-day average. The question is, can it get right to it or not? One of the tools that I use when I'm looking intraday at the markets to see are they getting ahead of themselves, where are they, are something called a pivot point. And I've created a 3-part video series. The first explains the formula. It's good to know it, but believe me, your charting service is going to do it for you. The second is understanding how to put it on a chart. The third is understanding the different numbers that are going to come up and how to utilize them. I teach this all in the video, and then I add to that a momentum index, which most people don't do. And the reason is you're looking for an edge. If you're trying to sell the market at a resistance point, is it overbought, oversold as you're trying to do that? It's all explained in the 3-part video. It's free. Simply give us a call. You can go to our website, by the way, and if you see our carousel of free offers right on the home page, choose this is what you'd want. You can also click right up here. If you see me on YouTube, it'll take you right to the page. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.